Good morning, everyone. My name is Vladas Kavekas. I'm a marketing director with RealtyProx and National Closing Center, and welcome to our webinar. Today we have a very special guest, and in fact, very special webinar. Instead of me talking about RealtyProx and National Closing Center, we have a very interesting and important topic: credit repair, and we have Randy Cochrane with United Credit Education Services. I believe, if I'm wrong, Randy will correct me in a minute. He's standing by right now waiting to get on this call. So again, credit repair, credit issues is something that every real estate professional encounters that problem in one way or another. And since we are working with short sales and we primarily a short sale processing company, credit issues is something that everybody in the short sale transaction has to deal in one way or form. So Randy is not only a credit education person and person who understands credit issues, he's also a very successful broker, and he's going to tell a little bit more about his company and how they're expanding and their goals and how they can help you. But I think it's very important that he is also a broker, so he understands the pains and the issues that you guys are dealing with, and at the same time he knows about credit repair, about beyond credit repair. Really, whatever they're doing is really broad and really helpful for brokers and agents and homeowners, and provides you with a lot of tools and techniques, and really ultimately you end up not just helping your clients, but you literally filling your pipeline with new deals. So before I turn this over to Randy, just a few words about RealtyProx and National Closing Center. We have all kinds of attendees today from different states and different backgrounds possibly, and brokers and agents. So in case you haven't heard about RealtyProx and National Closing Center, you are seeing our website, RealtyProx.com. If you don't have your free account, I highly encourage you just go to RealtyProx.com and create one. RealtyProx is an enterprise level real estate transaction management platform. So it means it's sophisticated, it's easy to use, and it's completely free. So there is no credit card required, there is no trial, there is no gimmicks. It's really truly free. We are essentially a technology company to begin with, so we're true believers of free technology, free tools. Your Gmail is free, your Facebook is free, your multiple other tools and apps are free, and so we believe your real estate transaction management tools should be free, as should be your short sale processing tools free. RealtyProx is different from some other companies because of our special relationship with our sister company, National Closing Center. So RealtyProx provides tools and connects all the parties, and National Closing Center processes your short sales. So you are, as a broker and agent, a listing agent, you're in full control. You're not kept in the dark. You know every step of your short sale transaction, and yet you don't have to do all the heavy lifting, all the boring work, all the tedious work, all the calling to the banks. But then again, I cannot stress this enough. You are not being kept in the dark. You know everything that's going on. You're in full control. You can literally see your deals progress in your smartphone or your tablet or your computer. But then you don't have to do all the work. So this is a brief introduction about RealtyProx National Closing Center. I'm pretty sure most of you folks are using us today and our members. But I thought this webinar and this topic is really, really important, and so I'm glad you're here. Thanks for being on this webinar. And before I turn this over to Randy, just wanted to let you know that he will take questions towards the end of the session. The session should last 35-40 minutes or so. So you can feel free to just go ahead and type your questions as Randy goes on with his presentation. Questions will be stored in the questions panel, and I will read a few of them out loud. Towards the end of the session, Randy will take those questions. The ones that we're not able to take physically due to time limitations, he will follow up with you later personally and answer all your questions, as well as if there will be requests, he will I believe, forward his presentation and possibly some extra materials. So he will stay in contact with you if you would like to, and so this is not going to be one-time thing. If you will have something to ask or to add, or you need some help, he will be available even after the webinar. So with that having said, Randy, thank you so much for doing this webinar for our users and everybody else who are on this webinar. Please feel free to unmute yourself, introduce yourself, tell a bit more about yourself, and let's get this started.
Awesome. Thanks again for having me today. One thing that I always like to ask everyone is that that you grab a pen and paper and screen right now. If for some reason you cannot see my screen, type a message in and we'll get that fixed. But grab a pen, grab some paper. We're going to share with you some very, very valuable information today, some free information. We're going to give you some free stuff. I know everybody likes some free stuff, so make sure that you have that pen and paper handy so you can take great notes. And as we mentioned, I will field your questions towards the end. As we go through the presentation, I'm sure we're going to answer a lot of those questions. But this is a very pressing topic right now, and we're literally today, on today's webinar, we're going to show you how to fill your home buyer pipeline and sell an additional 6 to 12 more homes per year without spending $1. So we're going to show you how to do that for free. So let's jump right in. Again, my name is Randy Cochrane, and our toll-free number is up on the screen right now. You're going to want to write that down really quick so that you have it. Towards the end, we'll give that to you again, but oftentimes people forget to write that down. I want everybody to have it. It's 1-800-480-1917, 1-800-480-1917. Simply press 0 when you phone in. Client care will locate me, and we can answer all your questions if we don't get to them today. But I want to share a little bit about me and my background. I was in the mortgage industry as a mortgage broker from 2001 to 2011, and owned a very large mortgage company. And so we dealt with a lot of home buyer issues. So I've been in that mortgage arena in my past. I'm also a continuing education instructor for real estate in the state of Utah. I am the CEO and founder of Zoom Loss Mitigation, and as well as an associate broker in the state of Utah for 13 years. I'm the designated broker for Equity Arizona Real Estate. We have 5 offices. I'm also a national sales director with United Credit Education Services. So I'm in the trenches just like you are. We're out working with buyers. We're working with sellers that are still selling in short sales. We're going to talk today about the marketplace, kind of what's going on. We're going to talk about some consumer misconceptions. We're also going to talk about the problem that we see in the marketplace, and we're also going to give everybody what the solution is to really doing more transactions in our current economy. And as we go through the presentation today, kind of keep an open mind, because when we talk about the marketplace, we're in a very different market than we've been in ever before. And hopefully everybody on today's webinar has read the book called Who Moved My Cheese. And that book is a very short book. You can read it in about 35 minutes, 45 minutes. Just download it onto Nook or your Amazon.com or your tablet, or go to the bookstore and buy it. But everybody should be reading the book, Who Moved My Cheese, because the cheese is moving right now, and it's moving faster than it's ever moved before. And the marketplace out there is kind of crazy, and I'll give you an example of that. Here's something that nobody's talking about, and it's on the forefront of what's going to happen here in the next few months. How many people did loan modifications 12 months, 24 months, 36 months ago across the country? Well, there's a lot of people that did loan modifications. Well, guess what's going to happen here within the next 30, 60, 90, 180, and 365 days? Those loan modifications are going to start adjusting. What that means is the interest rates on those loan modifications are starting to go up. on average, the average house payment is going to go up over $200 on the first adjustment. So think about that. All the people who did those loan modifications that could not afford their home before are not going to be able to afford their home again. We're going to go back. You know, I talk to a lot of agents every day that say short sales are gone. Well, guess what? They're going to be back because we're going to see a lot of people in trouble again. That's kind of the marketplace that we're in right now. Interest rates are going to be on the rise. We're seeing low inventory throughout the country in a lot of states. However, we're also seeing a lot of places where there's still a lot of short sales and deed in lieu and foreclosures taking place. So let's talk a little bit just really about today's market realities. Many people are still losing their jobs. I have a really good friend of mine that right after the beginning of the year, fortunately his company was kind enough to wait till after Christmas. They laid off 700 people in the month of January. And so one day he came to work, and then the next day 700 of his friends and other employees of the company were gone. And so there's still companies out there that are definitely feeling the effects of the economy. They're still downsizing. Again, many people have lost their homes, and many people have lost investments and retirements. We have a client right now going through the short sale process. Literally, over the last 4 years, they did the right thing, and they continue to make the payments on their home out of their 401k that they weren't even living in, and now all that money is gone. So not only are they losing the home to a short sale, but they literally took all the money that they had out of their retirement account and completely depleted it. These individuals are in their late 50s, and so very, very shocking reality for them that they're going to have to continue to work for a long time now. In fact, there was a recent survey that was done across the country where they were asking people what their age would be when they felt like they were going to be able to stop working now. And before, if you had asked that question about 25, 30, 40 years ago, if you asked somebody when they were going to quit working, they would say, well, I'm going to retire at the age 65 because I'm going to have this great benefits package. I'm going to have this fantastic retirement program available. And then for some of those, they're going to say, oh, well, I have my 401k. They actually stop working at is now the age of 80 years old. Now, I don't know if you're like me, but I don't want to be working when I'm 80 years old. So those are kind of some of the realities and what's happening in the marketplace. In addition to that, 58% of the population doesn't pay their credit card balances in full every single month. We're always seeing that as an issue, especially if you're dealing with short sales. Somebody defaults on their credit card. The credit card company's putting that judgment or lien on their title to their property, and we're having to renegotiate those. The average U.S. credit card debt's over $17,000, and those with more than $20,000 in credit card debt are likely to miss payments and see interest rates skyrocket and credit scores plummet. One of the things that we're really not even mentioning is student loans. Think about that. When the market turned and the economy crashed and everybody was displaced from employment or downsized, they went back to school. And they went back sometimes it was 2 year school, but now all those student loans are maturing, and we're starting to see individuals that really want to buy homes but can't because their student loans exceed what their mortgage payment would be. It's crazy. Also, about 25% of the population has a 599 credit score or below. That's 36.5% of the nation's prospective home buyers won't actually qualify to buy a home right now, even though they want to. So think about that. We got about 1/3 or more of the home buyers out in the marketplace right now that want to buy but can't. That's a really scary figure, and that's really our market. Those are our clients. And studies have shown over the course of your lifetime, having less than excellent credit could cost you $200,000 or more in interest and additional fees. I'm actually going to show you today a survey that was done by MSN Money that's going to show an example of how just having a credit score that's lower than another individual of 100 points or more is going to cost a person really a fortune over their lifetime. But 80% of credit scores, and I'm sure a lot of us on today's webinar have had things on their credit that aren't actually theirs. At one point in time, I went to refinance my own home, and my name is Randy, my mother's name is Sandy, and at some point somebody put her name in with my social and it merged our two credit reports. And it literally took me a year and a half to get that figured out and get it cleaned up. Countless hours, lots of money, and ultimately it ended up costing me a ton of dough because when I finally refinanced my home, the interest rate had come up almost a full %. And, you know, that's a lot of money over the life of that loan that I had. About 83 million people don't even know what their credit score is or what's currently on their credit report. And about 43% of employers use credit scores as a factor in determining who they're going to hire. And I actually just read a report that said that that could actually be as high as 64% now. So how much we pay on interest for mortgage, our cars, our credit card security deposit, that affects us, how much our homeowners insurance costs, and how much our auto insurance premiums cost. This was really shocking to me. We have a real estate agent that's with Equity Real Estate in our office. He's also a farmer's insurance agent. He actually told me here a couple months ago that the insurance rate on your car is higher if you have lower credit scores than if you have 2 speeding tickets. So think about that. You could go out and get 2 speeding tickets, and if you have less than perfect credit, you're actually still paying a higher premium than the person that may be somewhat of a reckless driver. And so what we want to do, here's our first free thing that we're going to give you today. You're going to want to write this down. You're going to want to go to annualcreditreport.com, and you're going to want to download your free credit report. Now, you get a free credit report every single year from each one of the 3 credit reporting agencies. But what you don't want to do is don't go to annualcreditreport.com and download all the credit reports. Simply go to annualcreditreport.com and download one. And then about every 3 to 4 months, go back and download the next one. And then go back every 3 to 4 months and download the next one. That way you're always seeing what's on your credit. Because here's what happens. Somebody steals your identity, goes out and makes a major purchase. Well, most people don't find out about that until somebody, 1, tries to collect on them, or 2, they go to make a major purchase, and then they find out that there's something on their credit that should not be there. And typically when they do, it's a derogatory. So you want to definitely go to annualcreditreport.com, see what's on your credit. Because just like our consumers and our clients who we're working with, you need to know where you're at as well. So let's really quickly go through the consumer misconceptions about credit. We're going to bust all the myths today. We'll go through these really quickly. Credit agencies are empowered with some type of governmental authority. And actually, credit agencies have no legal authority here at all. They're not part of the government like everybody thinks they are. They're actually billion-dollar companies that are just out there selling our information, making tons of money. So the credit agencies are required by law to derogatory items on your credit report for 7 to 10 years, and there's actually no law that says that credit agencies can actually report anything on us at all. In fact, just the opposite is true based on the Fair Credit Reporting Act. Misconception number 3, it's impossible to have a bankruptcy, short sale, or foreclosure deleted from your credit report, and actually bankruptcies can be deleted just like any other derogatory item that's incorrectly reported, obsolete, erroneous, misleading, incomplete, or that cannot be verified. So the nature of the item has nothing to do with its removal. It's just as easy to get a collection off of a collection off of a person's credit report as it is a short sale or a foreclosure or bankruptcy. Now, keep in mind that when a person gets something removed from their credit reports, it doesn't eliminate the debt. A person still owes the debt, but what it means is that that item's no longer hindering their credit score. Now, of course, when our clients or consumers go to a mortgage lender and they approve a loan, 1003 is, did you have a bankruptcy or did you have a foreclosure? And of course, that person, even if it's not showing on their credit report, they need to answer that question as yes, because if they don't, then that's considered loan fraud. Misconception number 4. The information on your credit report cannot be changed. And again, the opposite is true under the Fair Credit Reporting Act. Anything that is not 100% accurate can definitely be removed. And also, if it can be verified in a timely manner, it's coming off as well. So misconception number 5, it's illegal or immoral to have the information on your credit report altered or removed. And not only is it not illegal or immoral, but it's exactly what the Fair Credit Reporting Act is really all about. Because oftentimes there are things being reported on our credit report that we never authorized that creditor or that company to actually report. And so if we didn't give them our permission, then it shouldn't be out there anyway, especially if it's hindering our ability to make a major purchase, or frankly it's costing us more. His bankruptcy is 12 years old, and as you'll learn here throughout the webinar, you'll learn the statute of limitations on some of these credit reporting items, but that bankruptcy is 12 years old. It should have come off at the 10-year mark, but it didn't. So this individual's actually been penalized for the past 2 years when realistically they should not have been. So misconception number 6, paying a past due debt removes it from your credit report, and just because you pay an old debt doesn't change the fact that you were at one time late. And just because you pay it, most creditors don't go back and actually fix it on the credit report, because that would take effort and that would take money. And creditors, as you will learn, do not make money fixing things on people's credit reports. Misconception number 7, inquiries are not derogatory. It will not affect your credit standing or score. And that is, again, incorrect. An inquiry, on average, reduces your score by 4 points. And so we'll see where a consumer will actually go online. They'll apply for a mortgage loan with the company online, and then that company sells information to all these different mortgage companies. Well, if all these mortgage companies hold this person's credit and is dinging their score 4 points every time, you could take a person that was, say, in the 640s, and now all of a sudden they're in the 590s, and they don't even qualify to make their purchase. Also, if a person is actually out there applying for lots of credit, maybe they're at the car dealership, the motorcycle dealership, credit cards, furniture store, applying for a home loan, the creditors look at that, and that tells a story, because if this individual is to get all that credit, the creditor, what they're thinking in the back of their mind is, are they going to be able to pay me? And misconception number 8, if you get a derogatory item removed, it will just come back on your credit report. And again, not if it's removed legally with cause. And there are 2 instances when things come back on a person's credit report. The first one is a collection. So let's say you have a collection on your credit report. We get that deleted off the credit report, and then that creditor sells that collection to another company because it's not collectible. Then it may re-report, but it's more than likely going to re-report under a different company's name. Now, we also have a client in our program right now. They have the same collection showing up 4 times on their credit report with 4 different companies, because they just keep selling it and selling it and selling it. So that's the first time that that something may come back on as a collection. The second time is a bankruptcy, because a bankruptcy gets reported twice. When you file your bankruptcy, and then when it either gets discharged or dismissed. And so in the case of a Chapter 13, the bankruptcy itself is going to report when you file. But if, let's say, an individual's in a 60-month plan, and we get their bankruptcy deleted a year or 2 years into their plan, it's going to re-report again on that 60th month. So that's okay, because what we're looking for is a window of opportunity to open up for us to put these clients into properties, get them back on their feet, and then we can deal with that other issue down the road. Misconception number 9, credit. And as you're going to see today, just paying your bills on time, that's only one part of 5 that determine your credit score. So what's the problem? The problem is, and what it really comes down to, is a lack of financial education. And I know when I was in high school and when I was in college, I wasn't getting the financial education that I really needed. I learned my finance, I learned all about finances from the School of Hard Knocks, from making those mistakes. And that's why we see a lot of these individuals that are doing short sales on their homes, deed in lieu, and are going through foreclosures, because they're not financially literate. And my son, I have a 17-year-old son. He's in high school right now. He's really excited because this last trimester I saw he had a financial education class. And I thought, wow, he's going to be able to get some financial education at the high school level. He's a junior in high school. And about 2 weeks after he started that class, I asked him, I said, hey, how's your class going? And he says, great, we're trading stock. And I went, you've been in that class for 2 weeks and you're already trading stock? He's like, yeah, I got Google and I got Facebook. And then he told me some other technology company that I'm sure makes, Xbox video games or something like that. And I'm sitting there thinking to myself, wait a minute, you're in a financial literacy class, you've been in there 2 weeks, and you're trading stock? How about teaching you just how to balance a checkbook and know what a credit is and a debit is? So the financial education is really lacking in America. One thing that I want to share with everybody is something that United Credit Education Service is doing. Of course, we're a nonprofit organization. Our 501c3 company is called the Youth Financial Literacy Foundation. And one of the things that they've developed is a financial literacy program for kids that are in grades 5 through 9, so that they can reach out to them early. We're actually going into the schools. I just launched this at my daughter's school here a few weeks ago, where they can go through an 8-week curriculum and learn about financial literacy. And at the end of the curriculum, we come back in, we throw a pizza party, we donate $500 to their school. So we are providing a service to our community, and we're also providing them with some education. The best part about that is when I went in and I launched this program in their school, the school teachers that were in that room had never seen anything like that before, and guess who is their real estate agent for life now? Because we're doing something for their kids that nobody else is doing. So I actually use it as a tool to go in and expose my real estate business to an environment that I would never get an opportunity to go in. Now also for the real estate agents that are with our real estate company, we actually offer this for free as well to those real estate agents, to their children and their families, so they can participate in that program through our digital real estate classroom. So I'm really excited about that. It's a great program. We partnered with Family Mint, which is a fantastic online program. They also get nice workbooks. So let's talk about who the big 3 credit reporting agencies are. And again, I mentioned they're not governmental, any type of governmental authority whatsoever. You have Experian. They're traded on the London Stock Exchange. They're actually located in Dublin, Ireland. TransUnion, they're Empirica score. They're a privately held company. And then Equifax, they have the Beacon score. They're actually traded on the S&P 500, and they're located in Atlanta, Georgia. The ironic thing about these companies is they don't, most of them outsource their services to another country. So when you call, you're not even calling somebody in the USA. So again, they're billion-dollar corporations. They don't verify items placed on their credit reports, and they pay tons of fines for failing to update files correctly. I'm sure all of us can remember the Bank of America robo-signing deal, where they got fined tons of money. They got a slap on the wrist, and they just continued business as usual. Well, if that's you and me, and we're real estate agents, and we're licensed, and we did what the banks did, 2 things would happen to us. 1, we would all be in jail. And number 2, we'd all lose our licenses. However, these big companies, they have such deep pockets, they're too big to fail. They just write big checks and walk away. They don't care. And so these credit reporting agencies, they don't make money correcting credit. They make money selling credit files to big industries and mortgage companies, car dealerships, and so on. So what are the effects of bad credit on the consumer? This is the article that I mentioned that was posted in MSN Money. This is Emily and Karen. They're 2 friends who borrow the same amount of money over their lifetime, and each one of them gets $20,000 in private student loans to pay for college. College is also when they get their first credit cards, and they carry an average balance of $8,000 over the years. They buy new cars after graduation and replace them every 7 years until they buy their last cars at age 70. Each buys their first home with a $300,000 mortgage at the age of 30, and then moves up to a larger home with a $400,000 mortgage after turning 40, and then each a $50,000 home improvement loan to remodel the second home. However, Emily has a FICO credit score of 750, which is considered good to excellent credit, and 750 is really the barometer. That's the point in time where you're going to get the very best terms, rates, and conditions on a loan. While Karen has a 650 credit score, which is considered fair to poor. So depending on the lender, over the course of that lifetime, just having a 100-point difference in their credit scores, it actually costs $201,172 in additional interest, fees, and penalties for one person over the other. And so you can see that's how creditors really prey on the weak. And I don't even call creditors any longer. I call them predators, because they're like an animal in the jungle. If you're the lion and you're a weaker animal that's wounded because you have a lower credit score, you're the one that's going to get eaten. Because if you go in a car dealership with a low credit score, say 500, you're not going to get the deal on the car that the person that just rolled out with an 800 credit score is going to get. And so that's how they prey on the weak. So what are the effects on the consumer? Well, it really comes down to the low self-esteem. They feel ashamed. They feel powerless. They feel overwhelmed. They feel like they have no hope, no opportunity. And I'm sure lots of us on today's webinar have helped somebody sell their home as a short sale over the last several years that would not let us put a real estate sign in their front yard because they were embarrassed. They were ashamed. When it comes to credit, it's the same thing. So what's the solution? Well, it really comes down to education. And just being on today's webinar today, we're educating everybody about credit because everybody needs to know about credit. But credit awareness is on the rise. You can't turn on the TV or the radio and not hear something about debt consolidation, car dealership, advertising bad credit's okay. And so people are thinking about credit differently than they've ever thought about it before. And that's really what the Fair Credit Reporting Act is all about. I'm not going to go through that today, but it's something that you should definitely download and read. If you have trouble sleeping at night, that's what you want to take to bed, either that or our state contracts or forms when we look at our real estate paperwork. So here's some credit score facts. So credit scores measure whether a person's moving towards or away from default. It also determines whether or not their scores are going to be affected greater or less based on how old that derogatory item is. And derogatory items reported prior to 2 years can impact a score greater than something that may be 8 or 9 years old. And then the scoring system with the credit reporting agencies actually has 88 negative rating factors and only 5 positive rating factors. So think about that. There's 88 ways for everything to go wrong and only 5 ways for things to go right. That's pretty scary. So how can things, well, bankruptcies, Chapter 7, Chapter 11, and Chapter 13 are 10 years. Collections are 7 years, public records are 10 years, and inquiries are 2 years, and they're all regulated by the Federal Trade Commission through the Fair Credit Reporting Act. Now, one of the things that we wanted to talk about on today's webinar are the lending guidelines. Are lending guidelines getting looser or tighter? Well, based on all the new QM regulations and everything that's happening in the lending market, we believe that the credit guidelines, even though they seem to be loosening up, actually are getting a little bit tighter. There was an article in DS News on January 20th that said the average Ellie Mae loan in December of 2013 was 737. So that's what the average person that actually got an Ellie Mae loan during that period of time, that's what their credit score was. Now that's actually down, and this is how they determine whether or not the market's tightening or loosening. The previous year in December, their credit scores were 748. So the average score in December of 2012 was 748. Now, applicants that were denied a mortgage, and this is the scary thought, the applicants that were denied a mortgage, and I actually read this on the RealtyProx blog here a week or so ago, had an average FICO score of 696 for a turndown, a decline. So somebody applied for a loan to purchase a home and they were denied lending, even with a 696 credit score. So just because you have over a 600 or a 640 credit score or 580, depending on what lender you're working with, doesn't actually mean that you're going to get a loan. So here's the factors that you can control in your credit score. 35% of your credit score is compiled of your credit payment history. 30% is the amounts that you owe. So if you want to, increase your score, reduce your debt. 15% is the length of your credit history, how long those accounts have been open. 10% is new credit, and then 10% is types of credit used. Also, don't be too quick to have your clients pay an old collection or a lien that's showing up on title, because a lot of times, let's say they had an $8,000 collection showing up on title that was 7 years old. Rather than going back and paying that $8,000, a person's better off to enroll in our program and see if we can just get that removed, because it's going to increase your credit score. And as I mentioned before, just because we get that removed doesn't mean that they don't still owe the debt. That creditor could definitely come still and try and collect the debt, until their statute of limitations runs out. But if a person was to actually settle the debt, make sure that judgments reflect as satisfied after they've been paid, collections reflect as paid when paid, and then liens reflect as released when paid. Because if they don't, and that person goes in to get a home loan, that's still going to prohibit them from qualifying. Now, concerns of tangible scores, credit decisions are fair, older problems count for less, they have more available credit, interest rates are lower overall, and they have more money available. So here's what's not in your credit score. And I found this really interesting because if any of you on today's webinar have taken your fair housing and continuing education recently, that's really what this is. So what's not in your credit score is your race, color, religion, national origin, sex, marital status, your age, your salary, how much money you make, your occupation, the title that you have. It doesn't matter if you're a doctor or not, your employer, the date that you're employed, your employment history, where you live, any interest rate being charged on a particular card or account. And here's what I found most interesting is any items reported for like alimony or child support, separate maintenance obligations, or rental agreements. So think about that. You have a potential home buyer that pays their rent on time every single month, and they've been there for 24 months, and that does not count towards their credit or their credit score. However, if they default or go delinquent, then guess what goes on their credit? That negative item. So they're getting penalized for doing the right thing in a lot of cases. So you can restore your credit score. We talk with clients every single day. We tell people that that you can go in, you can dispute any item on your credit report, even if it's being reported correctly. We've had people remove positive items that have never been delinquent or past due, because I'm sure everybody knows somebody that's maybe co-signed for a car for somebody, and that car payment is prohibiting them from purchasing a house because it's on their credit, and it's showing as it's taking their debt-to-income ratio and skewing it a little bit. Well, we've seen where people have actually gone in and had a positive open account removed from their credit report so they can make their home purchase. So the burden of proof is definitely on the credit reporting agencies. And that brings us to misconception. I cannot restore my credit on my own. And yes, you can. You can attempt to do it yourself, just like you can attempt to sell your home as a for sale by owner. Okay, we all know that that doesn't work very well. But if they use a professional like us, that we're going to net them more money. We're going to get their home sold much quicker than they would be able to get it sold. And at the same time, too, we're going to navigate them through an extremely legal process. And so when it comes to credit, credit's the same thing. A person can definitely do it on their own, but they're much better off to hire a professional to help them do that. So I want everybody to pull out your pen and write down this website. It's www.united-credit.org. I'll give that to you again. It's www.united-credit.org. This is where our consumers go to access their customer portal. And so as you can see on the screen right now, on the top right-hand corner, there's a video tab. You can simply send your clients or your customers united-credit.org. They can click on that video tab on the top right-hand corner. That video tab is it's going to play a short video that talks about credit, United Credit Education Services, and how everything works. Also, there's a login button right there, and that login button is very important because that's where they're going to go to log in, see their initial credit score, also see all the derogatory items that are being disputed on their credit reports. Now, United Credit Education Services, when I went out and found this company, it'll be 4 years ago in April. And my litmus test for working with any type of company in real estate where I'm referring my clients to somebody else, where I have, I don't have the control over customer service, they have to meet the criteria for 3 different things. The first thing is they need to be a nationwide company. The second thing is they need to have a rating with the Better Business Bureau. And the third litmus test item is they need to have some type of money-back guarantee. Because I learned the hard way. Several years ago, I referred one of my very best referral clients to a loan modification company. And this loan modification company took my client's $3,000 and went out of business. And so my client, even though this company said they had a money-back guarantee, because they were out of business, my client didn't get their money back. So I lost my very best referral client for about 2 years until they ended up coming back to me because they didn't get their loan modification and ended up selling their home as a short sale and getting them some money from the lender as their cash incentive to move out of the property. So I kind of redeemed myself, but for a 2-year, 24-month period of time, I was unreferable. And so United Credit Education Services, they have an 11-year track record. They have an A+ rating with the Better Business Bureau. They've served over 200,000 clients. Just last year alone, they helped approximately 19,000 people get their credit back on track. They offer customized dispute letters for their clients. They have 24/7 online customer access. They have credit coaches available 9 to 5 p.m. Monday through Friday, and they have that 100% satisfaction money-back guarantee. But here's the coolest part. So when we have one of our clients enroll in this program that wants to get back into home ownership, and as you're going to learn here in just a few minutes, what I'm doing to fill my home buyer pipeline, as well as thousands of other real estate agents around the country, is they can log into their customer portal and they can see exactly where they're at. And so the nice part is so can their mortgage lending partner that they're working with. So whoever their mortgage broker is or their lending partner or yours, with their permission, they can log in and they can see this information. So when a person logs in, they can see their dispute letter instructions. If they're getting harassed by creditors and debt collectors, we can stop those collection calls. And here's the awesome thing. If our clients have a debt collector harassing them and they are breaking the law, we actually have attorneys that we're going to refer our clients to on a case-by-case basis that will actually file a lawsuit on their behalf for free and sue that collection company. It's an awesome service. Also, you're going to see information from the Fair Debt Collection Practices Act, and in addition to that, they can see their initial credit score, but more importantly, they can see everything that's being disputed or being deleted or being verified on their credit report. So let's say that you have a client that enrolls in the program and your mortgage lending partner is monitoring their progress, and they go into their customer portal and they pull this up and they see that they have 7 collections and 6 of them have been deleted. Well, the lending partner can now make that decision to re-pull credit, qualify them, and then send that approval letter to you. And I'm going to show you how we put that on steroids here in just a moment. So what would it be worth to have excellent credit? And I do want to mention that if one of our clients is enrolled in this program and we're disputing things on their credit report, and let's say that we get past the 3rd round of letters with the credit reporting agencies, and there's something that's showing on our client's credit that is definitely not theirs. And let's say they have proof that it's not theirs, but the credit reporting agencies will still not remove that item, which this actually happens quite often because the credit reporting agencies say they verify the information, but I don't think they really do. And so if we know that something's being reported on a person's credit report and it's incorrect and we have proof, then we're also going to refer that to the attorneys that we work with as well. They're actually going to sue the credit reporting agencies on behalf of our client for free and get that item removed from the credit report. Our clients may be entitled to a settlement as well, and the average settlement that the clients receive once a lawsuit's been filed and settled is somewhere right around $1,000. So that's just a fantastic service. Now, there are companies out there that charge as much as $5,000 to do what we do. Competitor charges approximately $1,200 to $1,500, and these companies have nowhere near the track record, documented results, or length of time in the industry, or offer a guarantee, which is a huge thing. So what would it be worth to have excellent credit? Well, for our clients that enroll in this program, and I'm going to share with you here in just a moment how I advertise, buy your home with me, we'll fix your credit for free. And I'll say that one more time, buy your home with me, we'll fix your credit for free. Program is this service is only $499 for 12 months worth of services. Okay, there's 5 rounds of letters with all 3 of the credit reporting agencies because each round of letters takes between 45 and 60 days. It can take anywhere between 10 months and 12 months for a person to fully complete this program, although I will say that we do see results in as little as 45 to 60 days. We recently had a client enroll in this program, and they went from a 613 credit score to a 737 in 40 days. So they went from not qualifying for an FHA loan to qualifying for an FHA loan. Now keep in mind, with the new Back to Work program that FHA has available, you can now get a loan 1 year after a short sale, bankruptcy, or foreclosure if you qualify. So this is a fantastic program for our clients. Now, of course, that comes with a 100% satisfaction money-back guarantee, and I'll explain how that works here in just a moment. But results are everything. And these are the results that this company has posted on their website at united-credit.org as of today. They've deleted 718,905 items from people's credit reports. So late payments, collections, public records, personal information that's being incorrectly reported. So here's how you're going to fill your home buyer pipeline. And I'm going to share 3 different ways for you to do that today. And as I mentioned, I've been doing this for almost 4 years now with my personal real estate business, having tremendous success. In fact, I was on a call this morning with a real estate broker. He just had one of his clients go through this program. They just closed on their condominium that they purchased from him about 3 weeks ago. They were literally in our program for less than 180 days. I've been advertising buy or sell your home with me and we'll fix your credit for free now for a long time. And how that works is we get our clients to enroll in the program. We get them to invest. We get their skin in the game because we all know if something's free, nobody follows through with it. Because we could walk around today and give out free gym memberships to 100 people and maybe 1 or 2 are going to go. But if that same 100 people enrolled in a gym membership and had to pay every single month, the odds are that they're going to go a little bit more often, especially if it's the beginning of the year. So buy your home with me, we'll fix your credit for free. So when a person enrolls in the program, let's say they invest $499. And when they do that, as the real estate agent or broker, all I'm doing is I'm getting a copy of their receipt showing their enrollment. I'm also having them sign my buyer-broker agreement. Now, my buyer-broker agreement, depending on what's on their credit, is going to be anywhere between 12 months and 24 months. So I've got a person that now has invested $500 in getting their credit back on track. They've executed a buyer-broker agreement with me, and when they buy their home and we close, at closing, I'm going to give my client a $500 broker credit on the HUD. As a real estate agent, that's a smart investment decision for me because I'm absolutely willing to give up $500 of maybe an $8,000 commission to keep a client in our program and get a sale that I would have never had in the first place anyway. And so keep that in the back of your mind. I was also doing this with a lot of my short sale sellers. If I was going on a short sale listing appointment and I was competing with another agent in my marketplace, I simply talked to my client and said, hey, sell your home with me, we'll fix your credit for free. And I'm going to get to our VIP seller recovery program here in just a moment. Before I do that, though, I want to talk about tripling the traffic at your open house and also tripling the traffic off maybe your Craigslist ads if you're advertising on Craigslist or posting properties online, and how you do that. And I'm not talking about the people just driving by the property. And in real estate, I ask real estate agents all the time what our job is when we do live events, and usually their answer is, well, we help people buy homes, or I sell homes, or customer service. So I get lots of different answers. But when I ask them, well, what does McDonald's do? What business are they in? I have a couple people say, well, they're in the hamburger business, or General Electric. What business were they in? And they say, well, they have a lot of products, but ultimately, and even the military. Think about that. What business is the military in? I actually asked a group of veterans that, and they said, well, some said, well, we're there to protect the country. And I actually had one individual that was in the military said, no, my job is training. My job is to train. That's all I do. In case we have an emergency, I know exactly what to do. And so our job as real estate agents, it's not really to go out and sell homes. Yeah, that's what we do. We fill out paperwork. But ultimately, our job is to generate leads, because the more people we have to talk to, the more homes we're going to sell. And so if we don't have anybody to talk to, we're out of business. And so this is just a way for you to talk to more people, because people think they have bad credit oftentimes when they don't. So to triple the traffic in your open house or triple the response on your Craigslist ads, all you simply need to do is put a sign out or put in your ad, bad credit okay. Just put bad credit okay, because you're going to get a lot more people to raise their hand and say, hey, I'm interested in buying a house, but yeah, I've got bad credit. And that's okay. You want to talk to these people. A perfect example of this is just a couple of weeks ago. It's pretty nice in Arizona where I'm at, and right now it's in the 70s and 80s, and we had an agent doing an open house, and the lending partner was in the garage, and we had somebody come through that had seen the sign that said open house, bad credit okay, walked in the house and said, hey, I saw that sign that said bad credit okay, I think I've got bad credit, and I want to buy a house. And so the loan officer said to him that participates in this program, simply said, well, why do you think you have bad credit? And he said, well, my credit card payments are due on the 1st, but I don't get paid until the 5th, and then I have to pay my rent first, and so I usually don't pay my credit card payment until around the 20th when I get my second paycheck. That person's not going 30 days past due, yet their perception in their mind is, I have bad credit. So that loan officer pulled their credit. They had a 689 credit score. The real estate agent double-sided that transaction because they simply said it was okay for them to come talk to them. Now, not all of them are going to qualify. You're going to pull a person's, your lending partner is going to pull a person's credit, and their credit score is going to be 550. And that's okay. Don't tell that person no. The saying in my office is, no problem, we have a program for that. Because how many real estate agents do this? You have a sign in the yard, and somebody drives by, and they call, and they say, hey, how much is this house? And the real estate agent on the other line says, let me look up the most current information on this home for you. While I'm doing that, are you working with a real estate agent? And that person says no. They say, fantastic. Have you been pre-qualified for your lending? And there's that long silence on the phone. And most of the time the agent will say, well, tell me what's going on. And the individual will say, well, I went to a mortgage person, they pulled my credit, they told me my credit score was a 550. And most real estate agents, the majority of them say, well, you really need a 640 credit score to get a mortgage loan, so when you get to 640, call me back. Click. We don't want everybody doing that anymore. We just want people saying, no problem. We have a program for that. And the reason why is because we do. So one of the things that I did a long time ago, because we put together a VIP seller recovery program. And when we would list the home, that's when we would start talking about what that individual wanted to do once their home sold as a short sale. I believe most real estate agents don't even bring that topic up until they get the approval letter and the seller has 30 days to get out of their home. So we always talked about, where they were going to go, what they were going to do, how fast they wanted to get back in the market and buy again. Because we wanted 2 transactions instead of 1. We never wanted to be one and done with anybody. And so just think about it. How many people do you know that sold their home as a short sale, modified their home loan in the last few years, or did a deed in lieu of foreclosure, or actually have a foreclosure on their credit? Well, there's a ton of people out there right now. And so this is where our VIP seller recovery program really kicks in. So let's talk about how you actually refer your clients to this program so that you can start filling your home buyer pipeline. Because the one thing that we want to do is we want to make sure that you're selling an additional 6 to 12 homes per year by using this program for free. So the first thing that you need to do is you just simply need to email your client's name, their phone number, and email address if you have it to ucesorg@gmail.com. So just email us their name and their phone number. If you have their email address, that's great. We'll contact them. And once we contact them, learn about their situation, we'll enroll them in our program. we'll email you their receipt so that you have a copy of their receipt, because once you get their receipt, you want to contact them and say, hey, congratulations on enrolling in your recovery program. As I mentioned, if you buy your home with me, we'll fix your credit for free. And by the way, you can also share that with your lending partner. You'll just want to call them up and work that out first. But if you buy your home with me, we'll fix your credit for free. In order for us to do that, I'm going to send over my buyer-broker agreement to you so that I can attach your receipt to that, so that I have a record, so that when you qualify, we go out, find your home, and we close your transaction, get you your keys, then I'm going to give you that $500 broker credit at closing. Or maybe it's a husband and wife, spouse, significant other, two people buying the home together. In a worst case scenario, you may have up to $1,000 investment coming back out of closing, but that's okay, because again, if their commission's 10 grand and you're giving up 1,000, you're still netting 9, and that's a small price or a variable cost to pay for an investment in your business for a deal that you wouldn't again had anyway. So we're going to email you their receipt, and then we're also going to contact your preferred mortgage or lending partner so that we can get with them and show them how to log in to united-credit.org with your client's permission. They can monitor their progress so that it's not you, because you don't know your mortgage lender's programs. You don't know that their program changed and they no longer need a 640 credit score. Now they have a 620 qualifier. So think about that. Think about that for just 1 minute. You have somebody else monitoring other people's progress so you can continue to go out and list and sell more homes. And at the same time, you just want to repeat this every week with at least one person. And here's why. There's 52 weeks in a year. And because we see results in as little as 45 to 60 days, what happens is once you start filling this pipeline up, every 45 to 60 days, you're going to have 3 to 6 people start popping out of this program that can absolutely go out and buy a home. So think about that. At the same time next year, you wake up in the morning knowing that within that next 12-month period of time, you're going to have approximately 24 home buyers come out of the program that can go out and buy a home. Now, not all of those deals are going to work because, let's face it, people sometimes don't follow through with the program. Other things happen. They get divorced, they get married, they relocate. But the whole key is having enough people in your pipeline that when they're coming out, you're getting them back into home ownership and what you really now. One thing that we're going to do today, since you took your valuable time to be on the webinar with RealtyProx, is any customer, client, friend, family member that you have that wants to enroll in our program, by tomorrow at midnight they can enroll and they can save $100 off the annual enrollment fee. So they can actually enroll in approximately 12 months worth of services, unlimited derogatory accounts disputed for $399 investment. You just need the discount code RealtyProx0225 in order for them to take advantage of that savings. Now, I know everybody on today's webinar has an 850 credit score, right? But if for some reason you don't, and maybe you went to annualcreditreport.com and you downloaded your credit report and you didn't like what you see on there, then you can still take advantage of service as well for yourself, and that's still going to come with a 100% satisfaction money-back guarantee. So you'll definitely want to take advantage of 3 other services, the additional client services that our company offers. One of them is LifeLock Identity Theft Protection. We strongly suggest that while our clients are going through this program, and any of us that shopped at Target during December, sure, just received your, I did. Another service that we offer, of course, derogatories on their credit scores. So, for example, a person can enroll in the Ultra Score program. It's a $149 investment. They get to work with a credit coach for 1 year. The last client that I had that took advantage of Ultra Score, they went from a 694 credit score to a 798 in 120 days that had no derogatories on their credit. We don't get nearly as many people in this program, but you are going to run across them. We actually have an individual right now participating in Ultra Score that is completely debt-free, that owns his own home, He wanted to buy a second home and couldn't because he had a 0 credit score. He had no credit because he hasn't used credit in about 10 years. And so that's a perfect program for him. Also, we have a service called Debt Zero, which is great for our home buyers. While they're getting their credit fixed, if they have more debt than what they want, they simply put in, it shows them what they do to be possible. We had a client go through this program that was a home buyer. It took us 14 months to get their credit back on track. But while they used this program, when they originally qualified to buy their home, they qualified to buy 160, and over that 14-month period of time, they paid off so much debt. When they actually bought, they bought at 230. So the client got a much nicer home than what they were thinking. The loan officer did a more expensive or a higher loan amount transaction, made more money. Real estate agent also received a higher commission because now they sold a home that was 230 versus 160. So the Debt Zero program is simply phenomenal. Now, I mention is we do have an agent affiliate program available, and if you're interested in learning more about that program, you simply need to email ucesorg@gmail.com and put in the title Agent Affiliate Program. We will register you for a webinar that we are doing on on Thursday evening at 8 p.m. Central. It'll explain how that whole program works. Now, the Agent Affiliate Program is the program that I've been participating in now for almost 4 years. So the program benefits, you're going to get a personal website that you can link to your other real estate websites. So, for example, if you want to see my short sale website, you can go to theforeclosurepreventionspecialist.com. theforeclosurepreventionspecialist.com. That's my personal short sale website in Utah. And you can see that there's going to be a link there to United Credit Education Services logo. You click on that, it's going to take the website right to the credit restoration video, so you can link all your websites together. You're going to receive personal marketing material. So if you're using property flyers, you can put a starburst on the front that says bad credit okay, and then on the back you can print the restore your score information. You're going to receive free training and coaching on how to implement this program into your core business. You're going to have marketing opportunities that you're not going to be able to get through your traditional business, because you can do your Craigslist marketing saying bad credit okay. You can post on social media. You can participate in the YFL program. It's going to provide some additional business revenue for you to offset your marketing costs. And the nice part about it as an agent affiliate, you can receive all the services that our company offers for yourself, and we can also show you how to get those all for free. So that's a phenomenal program. So all my contact information is up on the screen. Again, my name's Randy Cochrane. You can reach me in my office. So 1-800-487 extension 0. You can also send us an email at ucsorg@gmail.com, and we'll answer all of your questions. Send your referrals there. We'll always get back with you. We play baseball. We'll try and contact your client. If they don't answer, 3 strikes are out. But we'll continue to email them and follow up with them, and they truly want to get into back. With that being said, that's the information we have to share with you today. I know that we mentioned that we'll take some questions. I think we maybe have a few minutes to do that. So you want to, and we'll get those in.
Thank you so much. I'm sure everybody is amazed. There's a lot of useful information here. I was making some notes, so I'm sure you guys made a lot of notes. And let's take a few questions. We're a little bit over our time, so let's make it quick, and then we'll have Randy follow up with you guys personally. So let's see. The question that a few participants, attendees asked is, will you send this presentation to us?
Absolutely. If you email me at ucesorg@gmail.com and just put copy of presentation in the title line, we'll email out a copy of the presentation to everybody so that you have it. You know, if you're interested in hosting a webinar like this for your real estate office, or having us come into your office to your sales meeting, given the location that we're at, we could definitely do that as well. Also, we can always do a live webinar. We do lots of home buyer seminars and clinics with this information. In fact, Chase Bank just had us come in and do 2 home buyer workshops with them. So they invited all their clients and customers in that were their bank members and just had us simply come in and give this presentation. We shortened it up. It was about 15 minutes long. We also talked about not only credit but our real estate service, and it was a great opportunity for us to get in front of a bunch of potential home buyers endorsed by Chase Bank. So fantastic program, but we'll absolutely get this information out to everybody.
Right, a few more questions. Let's make it quick, but I want to ask at least a few questions, rather to have a few questions answered. So, what is the website that you mentioned for the affiliate program?
Now, we're going to do a live webinar for the affiliate program. So if you're interested in the affiliate program, just email ucesorg@gmail.com and put affiliate program information, and we'll get you registered for the webinar that we're going to do on Thursday. If you can't make the webinar on Thursday night, that's okay. Send me an email anyway, and I'll make sure that we get that that agent affiliate information out to you.
Very good question, I think. Do you have Spanish-speaking help?
Awesome. That's a great question, and yes. When you go to our website, you can click on the drop-down, and the whole website will translate into Spanish automatically. And we also have bilingual credit coaches available for all of our Spanish-speaking clients. We also have some other agents with our company that speak other languages. We recently had a client that came in that only spoke Farsi. We didn't have anybody in our office that spoke Farsi, but we actually went out and found a translator that could translate for us. So, if there's a language barrier, we'll definitely work around that.
Another, I think, good question. There's a husband and wife. Do they each have to pay $4.99?
One of the things that we typically do, and that's a great question, one of the things that we typically do, if it's a husband and wife or a spouse or significant other, we just had a father-son that wanted to buy a home together that enrolled in this program at the same time. Typically what we'll do is we'll save each one of those individuals $100 off their enrollment. So we can actually enroll the husband and wife, spouse, significant other in the whole program for $798 investment. So for us as a real estate agent, if we're giving a broker credit back at closing because they're utilizing our Buy Your Home With Me, We'll Fix Your Credit for Free program, then I'm only making a broker credit on $800 at closing. So what we're trying to do is we're trying to save our referral agents, our corporate account agents, a little bit of money out of their pocket.
All right, we have a few more questions, but I think they're more the person or situation specific, so I will leave those out. I hope you guys are not going to get mad at me, but Randy will follow up with you. He will get the full list of all questions typed in, all questions asked, so he will follow up with you. All the specific questions, feel free to contact him. I believe you still can see his contact information in your screen, but if you can't, he will get the full list of the questions and he will follow up with you, so you guys can keep in contact. And then again, Randy, you're receiving a lot of thanks and kudos here. A lot of folks are just writing that really useful information. They're looking forward to working with you. So it was a very good presentation today.
Wonderful. Well, our whole goal is to help everybody close more transactions. So if there's anything that we can do to help you do that, just call us 1-800-480-1917 extension 0. And as I mentioned, I'm in your world. So let's work together as a team and let's go close some deals.
All right, thank you, Randy. Thank you, everyone. Thank you so much for attending. We went overtime and you guys still stayed. We had a full room, so that's awesome. Thanks again. Thank you from everybody from RealtyProx too. This webinar was hosted by RealtyProx, so for those of you who are new and who are just happen to be on this webinar with Randy Cochrane, go check us out, RealtyProx.com, and definitely go check out Randy and his organization and reach out to him. And yeah, as Randy said, let's get more business. So thank you very much. Thank you, Randy. This concludes this webinar. Everybody have a great day, and bye-bye.